Every time rural India income rises, one number reacts almost immediately: two wheeler sales. And in a country that sells 2 crore two wheelers every year, even a small shift in rural demand moves the entire industry. Mobility represents aspiration and necessity. Motorcycles are not a luxury product, and they are economic indicators. Good monsoon, volume rises. Higher minimum support price, sales respond. Rural liquidity improves, demand revives. But over the last few years, the competition intensified. EV disruption began and the market share moderated. Hello everyone, I am Sebi George and this is Decoding Equity, where companies are analyzed through numbers and not by noise. If this style of analytical breakdown adds value to you, consider subscribing. I publish structured company research regularly for serious investors. Today, we decode Hero Motocorp Limited. Let us check what determines future growth of Hero. First, it is a rural recovery. Stable inflation and improving farm income support entry level motorcycle demand, where Hero remains the strongest. Second one is a premiumization. Hero is expanding its 125cc and premium portfolio while still behind the peers in higher margin segments. The directional shift supports the gradual margin improvement over time. And the third one is the electric mobility. Vida is Hero's EV platform with strong cash reserves and negligible debt. Funding is not the constraint. Execution and the scale will determine the long-term competitiveness. Financial performance. The quarterly revenue increased from 8,118 crores in December 2022 to 12,487 crore in December 2025, 15% 3-year CAGR. Despite mid-cycle volatility, the broader trend remains clearly upward, with the momentum visible in the most recent quarters. The quarterly net profit improved from Rs 721 crore to 1,275 crores over the same period. There was a spike in June 2025 due to higher other income, but even adjusting for that, the profit trajectory remains steadily improving, supported by stable operating margins. This reflects the volume recovery combined with the pricing discipline. Between financial year 2021 and 25, the operating cash flow broadly tracked the profits. In FY25, cash from operations stood at rupees 4,297 crores versus PAT of 4,123 crore, indicating strong earnings quality and the healthy cash conversion. Debt equity stands just 0.03, with reserves over 20,000 crore and borrowing under 750 crore. Leverage risk is negligible. Hero has ample internal capacity to fund expansion and EV investments without stressing its capital structure. Hero is currently trades at around 20 times earnings. Compare this with Bajaj Auto 31 times and Eicher Motors 41 times. TV Motors Company 63 times. Industry average PE is close to 28 times. Despite trading at a discount, Hero's ROC stands at 30%, comparable to Bajaj Auto and Eicher Motors, and significantly higher than TVS Motors at around 15%. Historically, Hero trades within an 18 to 25 PE. At 20 PE, valuation is within its normal range, neither distressed nor stretched. A re-rating will require stronger growth visibility, particularly in premium motorcycles and the EV scale-up. Hero remains India's largest motorcycle manufacturer by volume, dominating the 100 to 125cc commuter segment with deep rural penetration and one of the widest dealer networks in the country. Export exposure remains under 10%, making it the most India centric player among the peers. In contrast, Bajaj Auto derives nearly 43%, Eicher 20%, and TVS 23% revenue from exports. Promoter holding remains stable around 34.7%. FII holding increased from 27% in March 23 to about 29.4% in December 2025. DIE holding moderated slightly, but combined institutional ownership remains above 55%, reflecting sustained institutional confidence. Hero MotoCorp is not a speculative momentum stock, it is a financially disciplined, cash generating industry leader with a strong capital efficiency, debt light balance sheet, healthy cash conversion, deep domestic dominance. The next phase will depend on execution, premiumization, export expansion, and electric mobility scale up. For long term investors, the numbers show resilience. For the market, the key question remains growth acceleration. This analysis is shared purely for educational purpose and should not be considered a buy or sell recommendation. Investors should conduct their own research before making any decision. I am CS Sebi George and you are watching Decoding Equity. Signing off.